Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go over a couple of questions you guys have in the comment section, give you guys my opinion. Plus, I don't have that much to really dig into here recently. I've dug into a lot of stuff. So I'm running out of topics per se. So if you have any topics that you want to hear, put it in the comment section below. Let me know what you want to hear. But here's a comment, question, statement. I'll give you my opinion on it. It says, so the kids are already enraged over their college debts. Now they can't afford a home. They will have to fund their mama and dada's Social Security and Medicare. Oh, forget about healthcare. That ain't working. What do you really think is going to happen? Free market, prosperity? Can you say socialism if we are lucky? Bolshevism if it goes from bad to worse? Peace unto all. Well, there's a couple of things. If you look at demographics, if you look at kind of how the world is morphing, and obviously this is just my opinion, guys. I don't have everything figured out. That's what you'll find out when you get a little bit older, is you don't have everything figured out. But if you can get close to figuring out a lot of it, at least in the markets, at least you can figure that one portion out. But the demographic of Generation Z is smaller than some of these larger demographics coming through right now. So I think that the millennials coming through, they're a larger demographic. The baby boomers will pass away or retire and leave the workforce. And it's going to create a lot of empty holes above the millennials. So I think the millennials coming up, especially people positioned like me, because I'm an older millennial. I'm like the oldest millennial there is. I'm positioned quite well if I wanted to move up in work, because the boomers are going to start retiring, and I could pick off areas to move on up, even though I'm not going to. It's not my, I guess, it's not my cake, or it's not my cup of tea. It's not my flavor. It's not my, I don't know. I missed the Kool-Aid stand, guys. I didn't drink the Kool-Aid or something like that. But the people below me are going to have all these opportunities because there's going to be holes opening up everywhere. So I think that's positive from that perspective. And if you're really good, if you're a pretty smart guy or girl, and you're coming through, and I would say in your like 30s right now, you could kill it. You could kill it in these large corporations if you want to. And all you have to do is just be more competent than everyone else, and that's not that hard. The competency is, I think, highly lacking, at least where I work. So I think you could make a lot more money if you chose the correct path and wanted to take that route. You can take whatever route you want, but there's never been more opportunity in the markets as there's been today. You could start a YouTube channel. You can look at starting something for yourself in terms of a company, and you can reach people so much quicker through internet and YouTube and all these other places than you could doing it otherwise. So the opportunity is all out there. It's just, what do you want to do? What do you want to take, and how do you want to handle it? And some of these guys, and there's a huge premium on being like a genius right now. There's a huge premium. If you're a genius and you walk out there, and I know this is kind of like winning the lottery ticket, but you got the winning lottery ticket being a genius. But since you can connect to people so quickly, and if you're really, really, really smart, and you create a company, you can create wealth beyond, one's unfathomable time frame, because you can compress the time frame to like nothing to generate wealth, given that whatever you created is something that could be distributed quickly. So like something software related or something like that, you could generate a ton of money very, very quickly. Now, there is a huge premium on those who are very smart and can figure out very big problems. So, yeah, it's going to be absolutely horrible for those that didn't win the genetics lottery ticket of having a high IQ or being very wise very quickly in life. If you're around the 100 average, it's going to be a rough life. As these software geniuses come about and just blow by everybody making a ton of money. And that's what the world is basically evolving into, is those who can think very quickly, can program, can do all sorts of stuff, and they just blow by everybody else. And I call it the genetic lottery that they won. And with a well-thinking person, but not everybody can be that. You can't just go to college and learn this stuff and have a, let's say you're not gifted upstairs. And I mean, there's people out there, they're so gifted and they're so smart that they can learn things in 1/100th the time that a normal person can learn. So it might take them 1 year to figure something out when it takes an entire lifetime of someone who can still never figure it out. And then you've got guys that are way out there, or girls, IQs above like 180, that are just like ridiculous. I've taken some pretty high IQ tests, tried to solve some of these ones with like 180 plus or something, or 160 plus. They are really difficult, and I don't have an IQ that high. There's no way. So these guys they're ridiculous. I can't play with them at that level. And then there's people in like the 200s or 300s, and you're just like, okay, you're you're way out there. You must be looking at everybody like they're completely retarded. And I'm not trying to be mean, but I'm completely stupid or something. And they just get frustrated with people just not even, tripping over the basics to these people who can think, within seconds they get it. It says, I keep hearing shipping demands are down and you're betting shipping stocks will moon. I'm mainly betting on dry bulk shipping. I had a couple of other shippers in there, which is a commodity related boom. My question is, when do you expect to see a turnaround, and what is going to cause it if the economy does get weak and as a result demand falls? And then prices have to come down to equalize and generate more demand. Everyone that I read only focuses on the demand side of everything. Why is that? All of my arguments are based on supply side, and everyone keeps saying about demand. What I am saying with some of these things is the demand has to get smoked. It's a recession is imminent, but it's going to be from commodities. And when we go and try to basically expand our commodity use, the shippers will do very well, I think. But remember, it's a supply side on the shipping. It's supply side on commodities. It's supply side on shipping. It's supply side on oil. Supply side on uranium. Supply side on natural gas. Is it the demand that's really kicking up? Not really. It's all, what I'm debating is the supply side is going to be constrained, and demand for some of these is actually going up, even if we go into recession. I mean, I don't see the renewables picking up the slack here. There's no way to store that electricity. So they're just going to turn on natural gas. And if the world has a natural gas crisis, which we're in, we don't have enough natural gas. And if they put sanctions on Russia, I don't know what the heck they're doing. They're trying to starve their people, I guess, or something. So that's I think it's supply side driven, and with the dry bulk shippers, they haven't been building those ships at all. I mean, it's very, very low. Very low. So I think eventually you'll get a squeeze, and if we have to ramp up the demand for these commodities, I don't think they have enough ships. And even if you have a recession, the recessions are what they last like a year or two at most. So what we go into a little recession for a month or a year. Like what big deal is that? Just ride through it. Ride through it. And you don't know how big this recession is if we even have one. I don't think we're going to have one, but that's me. If we're going to have this big blowout recession, then you'd see interest rates going down on the 10-year, in my opinion. Or if something is like credit driven and we have a problem in the credit market, then you would see interest rates go in the opposite direction. You'd see them spike. But if they spike, you better be in precious metals, or you better be in some of these commodities, because that means like everyone's just exiting bonds and mass. It's the money's going to flow somewhere. So yeah, that's my thing there. And a couple of comments on Mark, and I don't have an opinion on that, guys. That's what he was Coming up here, we have a deficit of single-family homes for sale, not because there are too few, but because most homeowners are now trapped in their current homes. Even with the possibility of a high-priced sale, they can, for the most part, roll that over to a new home at a similarly high price, which will raise their taxes, insurance, and monthly mortgage payments. The low inventory is not structural, but financial. Well, it could be structural if people don't want to move and they don't put their house on sale, and you still have a larger demographic coming into home buying years. You still have a structural problem. And it all depends where the homes are located. Having, in Minnesota, where I grew up, they have multiple homes. A lot of people have multiple homes, especially two. They have a cabin, and then they have a house basically where they work. And a lot of people have a cabin either in northern Minnesota, South Dakota, or Wisconsin. Usually it's Wisconsin or northern Minnesota for the most part. Those homes aren't next to anything where you would live there full time, usually. So when people say, well, this person has two homes, they only need one, it's like, well, their other house isn't in a location to really make a difference anyway. So it depends where the houses are at, and I think it's structural. And somebody can say it's financial. I don't think it's financial. It's structural. It's demographic coming into home buying years. That is a larger demographic. And we haven't been building as many homes as we had in the past. So I think that it is structural. And I don't know how they're going to get these. There's not enough homes for how many people there are. That's what it comes down to. So now they're just fighting for either through rent prices or through the price of the homes to purchase. They're just competing. And I don't know where the breaking point is. But at this moment, looking at the weekly data from Realtor.com, the market is still accelerating, home prices higher, and inventories are shrinking. Now, inventories can go up with home prices going up. That is when it starts to normalize, and that's when you'll see the rate of the home prices slow down. I just think it takes longer than what most other people are thinking. So people will say, we're in a bubble, but we might be 2 years away from the top where things actually start to decline. We might be 5 years. We might be 10 years. Is that a bubble if you can say, hey, we're in a bubble, but it won't happen for 2 or 3 years down the road? I think that's a little premature. So I think that people who are calling for a housing bubble are just premature. So, I mean, that's what we have there. Looking down, yeah. So this guy sees it as a positive. And guys, when you see these guys with my picture on it, that's a bot or something. It's not me. Don't click on any of that garbage. And I can't take it out because they put it up faster than I can basically block these people. So I usually click on the usually click on this little thing, and then I hit a hide user from channel. But you have to go through like a billion of these things, and I just don't have the time to go through every single one. So don't click on any of these pinned by finding value. That's someone trying to act as me. So don't get sucked into it. So coming on down, even my wife is now bothered or not bothered when the portfolio goes down 10%. How will the shipping container, it's mainly dry bulk shipping, if you want to know, companies perform if we get a full-blown recession where everything goes down? I don't think, see, the question that you're asking is assuming that a full-blown recession is coming. I don't think we're there yet. And everybody here, when the stock market goes down, they go either full-blown recession or where it's full game on, we're going to moon this thing. That's like that's your on-off switch. On, meaning we're going to go to the moon. Down means we're in a full-blown recession. There's nothing in between with all these basically people in the comment section. I don't think we're going into recession. Why? Because we have oil prices that are still going higher. We've got home prices that are still going higher. And the majority of recessions come from a decline in real estate prices. I don't think we're anywhere close to that. So I think we're years out. That's my take. Based off of real estate and and oil prices. Now, could we see a recession 2, 3, 4, 5 years from now? Yes. Yes, we could. And what I am expecting is oil prices to be between $200 and $500 a barrel, something ridiculously high. I don't know, blow off top, maybe like 300 and something dollars a barrel or something like that, at basically current prices, maybe a little less. And then it won't stay up there for long. You'd see the 10-year yield start to decline. You'll start to see the Federal Reserve funds rate go flat or down. And that's when everybody is going to position for that crash. I don't think we're there yet. Nope. I just don't think we're there yet. Moving on down. If inflation is high, it makes more sense to use credit card to pay for day-to-day bills. Yeah, with the devalued dollars within that month or whatever, that makes sense. And guys, what I do is I buy stocks and I just hold on to them. I think that we are going into a commodity boom, and all I do is accumulate assets and commodities at that time. And I got some other stuff like healthcare and some other sectors, but that's all I do. That's it. And I don't try to time things in the very short term. I've been pretty, I think, upfront with that. I buy assets, and if they fall back down, I just accumulate. And then I'm accumulating for the entire bull market. And even if we were to have a recession, it doesn't fix any of the problems in the system. It would be a buying opportunity. And I know people are going to try to time everything. I don't think it's worth it. I don't think that it's worth it, because if you get it wrong and this thing goes, you're out of the stocks. So, we try our best to time the short term, which is the most difficult. I accumulate shares on the short term because that's all we can do. And then I ride the mid to long term movements, the big trends. So it's like someone commented on another video, would be great if you could interview someone who's been in shipping for a long time. Been trying to find resources there. I don't know anybody who is great on shipping at this time, though. It says, I would also like to see someone knowledgeable about dry bulk. I already searched, like you, found Hellenic Shipping News. That's the economist of the dry bulk shipping. From what I get news, but not an expertise. Justin Huhn, for example, gives me expertise on uranium. I would like to find the same with the dry bulk sector. He or she is out there somewhere. May I ask who you source on the oil and gas sector is? I would be interested in reading up on their information. Josh Young's pretty good in the oil and gas, and so is Eric Nuttall, Nuttall. I follow both of them on Twitter, if you want to know. They're pretty good. And all I do with all these commodities is just look at the inventory levels. And if they continue to decline, I just sit in them. Even if we were to have a recession, I still don't think all the main problems are going to be solved. So I'm riding it, guys. Irrespective, even if there's a short term, even if the charts look bad on the short term, I'm still going to ride this thing. That's how much I think this commodity bull, as long as that CRB index. So if I were to look at the CRB index to stock ratios, as long as that is somewhat bullish and going up, I'm just going to ride this thing. The demographic for the millennials is larger all the way out to like 2027, 2028, 2029, 2030. And it all depends on that relationship between them and the real estate market. But if you look at the CRB index to the S&P 500, just to kind of show you, and I know I went over that before, but oh man, here we go, right here. As long as this thing is basically, in an uptrend, and even if we pull back big, even if we were to pull back all the way back down here, I'd still be in it. Because the downtrend is broken, and this is uber cheap down here. So what I'm doing is I'm basically hedging myself with time. So I'm just going to ride this big shift that's happening with commodities. And I think we're going to go into a bull market that's probably 10 to 15 years in length. So why would I be worrying about the short-term movements in the very short term? I don't understand that. So my time frame, I think I have right based off of my research on what time frame I should be using. So, I mean, this is like buying stocks in 2009. If you had bought stocks in 2009 and held the entire time till just recently, 2020 is probably when I would have sold, because the commodities were in such great buying opportunities at that time. That's when I would have bought all the commodities. And that's when I did. But this is like buying commodities now is like buying stocks in 2009. And if you were to look at what stocks did in 2009, they were coming out of a large sideways movement. There's the sideways movement. In 2009, you'd be buying them down here in this, we've been coming up some. And so you'd be buying it like 2009, 2010, and then it breaks out and makes this gigantic move. And what's happening is we're going into another sideways motion, just like this consolidation period for stocks. That's what this is coming up. It's a consolidation period for stocks. So commodities are going to be, I think, really, really good. It's like buying the CRB index, in my opinion. And I know some people, oh man, this one doesn't go all the way back, but it'd be like buying, here, I'll give SM Energy because I know SM's got the data and it's one of my favorite companies. It'd be like buying SM Energy like in this portion over here, somewhere in this range. And even if we get this pull up, and even if we were to get a pull back, I'd still buy it. Like I'm not going to do anything. There's the double hump that I usually see. And then you get a big, huge run. So I think that we're somewhere, in 2001, somewhere in this range in here, where even if this were to come back a little bit, even if that were to come back a little bit, I'd still hold on, and then we'll break. And I don't know if it's going to come back. We may just break and move higher. So my strategy is just to buy this thing and hold on. And I bought, all in this general vicinity for the majority of my holdings. I've just been holding on. If we get a pullback, so be it. I'm not worried. I think these conditions will persist all the way through the 2020s. So that's my strategy there, guys. I know this is getting a little bit long, but I just wanted to give you guys a little chat on a couple of different things. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't. Go to my website. Platinum membership is the membership that you want. If you want to join my website, what I'm trying to do is I'm trying to train people on how to become better investors. It's basically training. I've done some training on technical analysis. I also did some training on my approach to investing, which covers a whole bunch of different things. I go through a slide deck that is downloadable if you are a Platinum member, and you can see it and what my approach is, what I use. I'm going to hold more training sessions. The training sessions will include more technical analysis, looking at fractals, looking at some of these things that you can see in the charts to determine if something is worth going into. And fractals don't tell everything, but they do tell some things, and it's good to know those things. So that training will be coming up. I have to schedule it. I have to figure out when I want to do it. I got to schedule some time off for it because I'll probably do it on a Friday. We'll do our question and answer session this next Saturday. So we'll have a next Saturday. We'll go over some stuff there for question and answers. And it's okay to ask me anything. You can ask me in the comment section too, even if it's psychologically driven or learning about investing and what maybe is important and what isn't important. But yeah, ask away, guys. So we'll end it there. We'll catch you next time. This is Finding Value.